Well, last week, US indices dropped quite hard after the previous retracement. Let's see whether it can retrace to higher levels or drop further. That's why I'm sharing about the market insights in our weekly market analysis for the last week of March towards first week of April for FX, commodities, indices, and the dollar index. What's up, traders? My name is Avinash for my Market Wits channel. This is just my opinion and not a financial advice. Now, previous week we saw a pretty flat market relatively for two reasons. The first reason, already the crude oil, gold, indices had bigger moves the previous weeks. So you can say it is just like a cooling off period. But the indices moved much more. The second reason is whether the geopolitical situation will worsen further or cool off, as there is a mixed sentiment and confusing whether there is a possibility of war or any negotiation or peace talks can go on. Now, let's look at the fundamental data for this week. So many of us know what the first week of any month is. It is the non-farm payroll data and the unemployment data. Starting from Monday, we don't see much important data. There is a Fed chair Powell speaks, but it won't impact much. There is so many data which is on Tuesday, but none of them are highly important. Going on Wednesday, we see a very important data. So first of all, how do we know it is important? It will just simply denote by the red. So highly impact data. If it's on yellow, I don't think we should look at it, but red, we should look at it. So ADP is what? ADP non-farm employment. It's basically an employment data where it will give an indicator for the non-farm payroll, how many jobs has been added. So last week we see 63,000 jobs were added. Now there will be 42,000 jobs on the forecast list. So it will compare against the forecast. So we should always see to compare the forecast with the actual. So if the actual comes at say 32,000 or 30,000, so it is against the US dollar. Both retail and core retail sales are important. That how many sales has improved, or in overall how many people, how many consumers are spending. So overall sales. So you can also see the data over here. So core retail sales is nothing but the total value of sales excluding the auto sector, and retail sales is including auto sector. So if the actual comes 0.5%, so it will be in favor of dollar. If this comes 0.5%, again it will be in favor of dollar. Both together are if in favor, it is good for the dollar. So in this case, the market will, it's good for the dollar, so the dollar will become stronger. Going back on the Friday, which we have the non-farm payroll, previously the data had come better than expected, 56,000. And as a case, even if you want to see, you can see the dollar has been rising, the dollar index went up, and currently it's showing as a forecast of 56,000 people have been added to the jobs. If it comes say 75,000, it is good for the US. Again, we will combine with unemployment rate for better results. So if the unemployment rate comes at 4.3%, along with the increase in non-farm employment change, that is a very good sign for the stronger dollar. Now let's go back and look on the technical side of the things. So this is the dollar index, what we are looking at, and the dollar index is been moving on an uptrend channel, and you can clearly see that 100, which is the psychological level, on this is a daily chart, and you can see the range, which the low is 95, the highest 100 levels, and currently from February it is having an uptrend. So what we are looking presently is that yes, we are looking at uptrend, but again there is this barrier of 100, which is also creating a double top. So what you mean by double top is the two times nearly it has been added. So this is like a resistance, and here you can also see, these levels have are very important currently. So currently we are looking between these levels, but if it closes above these levels, we can look for a stronger dollar. Now, next we go for the crude oil. Yes, the crude oil, yes, we see some some movement in this week, but overall if you see, it's not moved much this week. So it is, yes, in this there is a range, but we don't see any new levels. It fell from 100 to 85 and it came back again. The full week this happened. You can see it's in an uptrend. You see the barrier on 100 levels. So yes, we see a support of 93, which also has bounced many times and is also the trend level. So currently we're looking a close above 101 or a close below 93 level. Next, we go for the Euro USD. The Euro USD is been on a downtrend. So downtrend where, yeah, the downtrend, yes. Now what we are looking as a support is at 1.4, but you see from Jan the highest was 1.21, fell to 1.14 levels, and from 1.414 it has gone to 1.16. So we are just seeing whether if it crosses around 1.16 it may go higher, and if it goes breaks this 1.14, but overall the trend is down. Next, going for the GBP USD. The GBP USD had also is also falling because you saw the dollar index is on an uptrend channel, so dollar index is strong, so naturally the pairs, most of the pairs are weaker. You see a good consolidation between 1.35 and 1.32, which makes us, skeptical that to buy above 1.32 levels, and if it closes below 1.32 we can look at 1.30, which is a psychological level. Note that earlier GBP/USD had created a head and shoulder. So head and shoulder is, this is the shoulder, this is also a shoulder, this is a head, and this is the, you can say, like a neckline. So it is below the neckline, and if it goes down it will complete the pattern. So 1.30 will make it complete the pattern, which is that the trend is on the bearish side. Okay, and looking on gold next. So gold is pretty much flat after breaking, you know, breaking the current low, going towards 4,000, unable to break 4,000. Remember in my last video, I said that, when market was trading at somewhere like 4,600, I said that yes, the first target will be seen at 43, 4,400. The next target will be 4,200 to 4,100. So we can see because, it has come to this zone earlier. So naturally now, even with this moving average, it is on the support. But on the 4-hour side, we will see that, okay, it has given a low. So, there is a tool. Let's go and add Fibonacci. We take Fibonacci from the highest levels to the lowest levels. Yeah. So we see it's bounced from this level and again trying. But if it bounces from 50 level, a good entry level for selling on a bearish level. Then we look at silver. Silver also, let's try and do the Fibonacci. So let's take it to the high. Yeah. So if you put to the high, you see that it has also touched the 38 level. So both towards the retracement, Fibonacci is very important to know the retracement, which still is on the current trend. So again, when this resist trend line plus the Fibonacci at 75 levels on the silver is a good key level, either closing above or holding below. After the S&P, let's go to the indices, which is a key for this week, because you see a good movement from falling from the high of 7,000 to 6,300, which is nearly 10% drop in March. And we saw a retracement here. This was due to the Trump's comments on pausing the strikes on Iran, tracing around 2 to 3% at the start of the week, but falling as no truce arises. Same can be seen on the Nasdaq. The Nasdaq level, if you want, we can go deeper and see, and we can also put as a daily chart D1 one day. So daily chart, you see the level here. It's a consolidation level which has broken it completely. Next level, it is going up to nearly 22,800 level, and you notice that this is called as double top, which I had mentioned earlier. This is double top here, here, and then breaking this and reaching this. So looking both at the daily and the 4 hour, it's set to decline, and we will see what happens during the geopolitical. But in geopolitical tensions, because there is stocks are falling, and investors are moving to bond prices, or the dollar is getting stronger. Thank you so much.